Hi everyone, welcome back to Corporate Decoder. Today we're diving into Air Transport Services Group Inc.'s Form 8K filing, and it sounds like they're about to make a move that will, shall we say, take off. It involves something about owing a lot of money that someone else will be paying, but only if the conditions are right. So Air Transport Services Group, also known as ATSG, filed this report because something significant is happening with their debt. They're letting everyone know that they're planning to pay off some bonds early, but there's a catch. This Form 8K or current report is basically an update that companies file with the Securities and Exchange Commission, the SEC, to keep investors in the loop about big events. Think of it as a corporate news flash. The date of this report is March 27, 2025. The main point of this report is about paying off some of their debt. Specifically, it's about some senior notes or bonds that are due in 2028. These are called the 2028 notes, and the company intends to redeem them. That means they will buy them back from the investors. So on March 27, 2025, a notice went out stating that Cargo Aircraft Management, a subsidiary of ATSG, will redeem all of its $700 million in outstanding 2028 notes. They're doing this on April 11, 25, which they call the redemption date. But here's the kicker. This whole thing is dependent on something else happening first. The merger of ATSG with Stonepeak Nile Merger Co. Inc. or Merger Co. has to happen. It's like saying, I'll pay you back, but only if I win the lottery. The merger agreement was made back in November of 2024. If the merger goes through, ATSG will pay 100% of the principal amount of the 28 notes, plus any interest that's owed up to the redemption date. This is good news for the bondholders because they'll get their money back sooner than expected. To sum it up, ATSG is planning to pay off $700 million in debt, but only if their merger with Stonepeak Nile Merger Co. goes through. This is a big move for the company, and it's something that investors should keep an eye on. If the merger doesn't happen, the debt won't be paid off early. Now, what does this all mean? Well, it shows that ATSG is likely confident that the merger will be completed. Otherwise, they wouldn't announce the redemption of the notes. It also suggests that Stonepeak Nile Merger Co. is willing to take on this debt as part of the merger. From a financial perspective, paying off debt can be a good thing for a company. It reduces interest expenses and can improve their credit rating. However, it also means that they need to have the cash available to make the payment. In this case, it seems that Stonepeak Nile Merger Co. is providing the cash, or at least enabling ATI to have it. ATSG is in the air cargo business, so their financial performance is closely tied to the overall economy and the demand for shipping goods. If the economy is strong, ATSG is likely to do well. If the economy is weak, they may struggle. One thing that stands out is that this move is dependent on the merger. If the merger falls through, this plan is off, highlighting the reliance on outside factors and partners. This deal could allow it to streamline operations or enter new markets, making it stronger. However, mergers always carry risks, such as integrating different company cultures and managing potential layoffs. Overall, it shows that ATSG is making strategic moves to position itself for the future. But as with any big decision, there are risks involved. It will be interesting to see how it all plays out. Thanks for watching. If you found this helpful, please give it a like, leave a comment, and subscribe for more Corporate Decoder deep dives.